We are live. Travis, I'll let you take it away.
Awesome. Well, good afternoon, everyone. Good morning, depending on where you are. I'd like to welcome you to the 2023 New Trends and Angel Investors presented by PIGEE. I have an awesome panelist lineup with me, but I'll take some time before we get to them to properly introduce myself. Like I said, my name is Travis Bruffy. By day, I'm a principal at Ligo Partners. I spend most of my day covering consumer and supply chain investments for the family office, but I'm also an avid angel investor myself. My good friend Leroy has prepared a great lineup to us. I know you're not here for me, so we'll jump over to them. We'll start off now with Katie. I'll hand it over to you to share a little bit about yourself and introduce yourself to our audience.
Hi, everybody. First of all, Leroy, thank you for inviting me to be here today. My background is in commercial real estate, and all the while I was working as a commercial real estate lender, I was investing in stocks and real estate and produced a movie. And then I got into startups and I just got hooked. So now I spend my time as a full-time angel investor, primarily investing in underrepresented founders in CPG and tech. And then I'm also a partner at PowerToPitch, where we help pre-seed to seed stage founders with their pitch and their deck, and then make warm introductions to investors.
Amazing. Next, we'll pass it over to Leroy. Leroy, tell us about yourself.
Hi there, how you doing? So my name is Leroy Lawrence. I'm the founder of PIGEE, the homing pigeon. I'm a 4x founder. I was formerly the managing director of the stockbrokers in the UK. I was also the CEO of an investment bank in Switzerland, and I'm an angel investor into US, African, and UK companies as well.
Amazing. All right, next up, Matt, tell us about yourself.
Cool. How's it going, everyone? My name is Matt Sherman. I'm a startup scout based here in Phoenix, Arizona. I started through my podcast. I've interviewed about 900 founders on my podcast, Forward Thinking Founders. After about 500 interviews, I realized there should be a scalable way to scout and help startups. So I started my company, Seadscout, which has since facilitated about $4 million into about 35 companies, and we're just getting started.
And last but certainly not least, we have Cameron here joining us.
Thanks. Yeah, I'm Cameron. I just came from Google for about 8 years and got caught up in the layoffs and decided to make lemonade out of it. I've been working in product advisory and working with deal flow for early stage companies that are notably being formed out of the layoff economy, and learning a lot myself, and happy to share what I'm seeing close to the ground right now.
Awesome. Well, thank you so much. Obviously, you hear the CVs. The panelists are definitely impressive resumes, impressive backgrounds. We have an interesting discussion kind of tailored around macro events and what we're all seeing. We're all really curious to hear everyone's opinions kind of on the trends that are mentioned, the discussions that we have. But before we jump into those questions, I want to take everyone's attention now to the bottom left of your screen. You'll see an icon that looks kind of like a megaphone. That's where you can enable the question and answer function. At the end of the presentation, we actually will have a short Q&A session. So if you want to tailor a specific question to one of the panelists, to myself, or anything about the things that we talk about, or really anything you want to get our opinions on whatever it is, just go ahead and shoot us a message and we'll get to it at the end of the presentation. But before that, before we get into all the questions that I know you guys are eager to ask, let's jump into really what we're here to talk about. And that's first off, kind of what's going on in the angel environment across all of our different backgrounds. First and foremost, we'll start off with this question. What vertical do you think is most popular for angel investors right now? And we'll go ahead and let's start off. Matt, if you don't mind starting us off, what do you think is currently most popular for your angel investors right now?
Well, I feel like markets go in herds, and right now it seems like the flavor of the week is AI. Rightfully so. I mean, look at the technology that's being put out by Midjourney, OpenAI, some of these companies, Google as well. There's a lot going on there, and usually there's a lot of change in a technology, change in a market, that's where startups go. With that said, I think that is actually the exact reason to not invest in AI. Prices are going to be inflated. There's going to be a lot of noise. It's going to be hard to find the signal. But with that said, I think objectively speaking, right now, AI is the flavor of the week.
And Cameron, do you agree with that, or really what are you looking at these days?
Yeah, well, what I'm seeing is people really, there's a lot of change right now. Obviously, I mean, even after this presentation was set up, the SVB crisis happened. But what I'm seeing is people really going to what they know. If someone has a history in in the automotive industry, and that's really what they know, they're going back to the roots, and they're looking at what where they have the most ability to contribute and the most confidence in. Obviously, there's big trends in generative AI, and a lot of people wanting to take advantage of that and working in that space for sure. But one thing I've noticed is just the people working their niche, so to speak, to sort of weather the storm seems to be a trend that I'm seeing.
Yeah. And Cameron, maybe alongside that, if something is within your niche, how important do you really think your investments are to contribute hands-on and be an involved angel investor? Are you more so just passing a bunch of checks across the ecosystem, or really kind of how do you think about that if it's within your niche that you're talking about?
Yeah, I think it's the experience that I've had, with my startup. I was in a very strange niche. Tabletop Vacations it's a vacation company that deals with niche vacations for, hobbyists. And so it's the type of thing that if you were following, going after some of the mainstream investment types, or eventually trying to go after Sequoia or something, it wouldn't make any sense. And so the investors that we found were deep in the space. They had the history. They weren't necessarily angel investors, but they made angel investments every once in a while, but they really knew the space, and having them on our side to guide that investment and help leverage the networks, et cetera, was extremely helpful, and sort of gave me the impression that it's not necessarily about aligning yourself to investment as a whole, but finding the right investor. That however weird your business is, there's an investor looking for that. There's someone who thinks that's cool. And the more niche and the better connection you can make, the more you're able to leverage their unique experience and connections in that space. So that's what I'm seeing.
Yeah, definitely can agree with everything you said. Now moving on to Katie, really what sector do you think everyone's flocking to these days?
I'd have to echo what Matt said in AI. I mean, I was actually talking to a founder earlier today, and the feedback she's been getting on her business is that they want an AI component in the business. The VCs are asking for that now. So I thought that was pretty interesting. But I think with, like Matt said, it's an opportunity to look at like everyone's going to be flocking to AI. Everyone's going to be, trying to find that next big thing there. So there's going to be a lot of players in that market. I think there's opportunities in other businesses, whether it be something as simple as CPG and, a new drink brand or food or something like that could really be a good opportunity to take advantage of right now.
Yeah, completely agree. And Leroy, I'll let you kind of be the last one to answer this question. It's last, but certainly not least. And also maybe alongside your answer, consider, for people maybe not implementing AI right now, do you think it's a necessity and almost kind of a passage of the times to implement some sort of AI into their business model? Or do you really just think that is, kind of just, you can stay within your niche and dominate that if that's what the market's calling for? Leroy, you there?
I'm here. Who was the question directed to? Was that for Matt? I think
that was to Leroy. Sorry, I was talking to Leroy. Is Leroy there?
We might have lost Leroy.
All right. Well, no worries. Well, maybe we'll pose that to everyone, kind of with everyone's kind of hands-on expertise and kind of, especially Cameron saying that you like to you're pretty involved and be very, an advisory position alongside your angel checks. Are you advising people to kind of chase the water, chase the valuation game that is inherent with this AI wave? Or are you kind of along maybe what Katie is saying, is there still room to dominate your vertical, dominate your niche, kind of with keeping an inherent business model?
I've got some opinions on that, mostly from a product point of view. I think, Katie and Matt probably have a better view on the investment front. What I'm noticing is, if you've got your head really deep in AI right now, if you've been really playing with the APIs and playing with Stable Diffusion, and if you've got a bit of a technical grasp, you really understand where the threshold is right now on AI. Like, you want to use it to help you with your homework, but you don't want it to be your lawyer, right? There's a certain point where the factuality and the things start breaking down, and where you're realizing, oh, okay, this is what it's capable of and this is what it's not. However, the advances are happening rapidly. And so I think a lot of the investments are going to be on the point solution, where it's saying, okay, well, if we just focus on this one use case, we can get it there. And if you look at the startups that are coming out of the space, that's exactly what's happening. But I think I would encourage people to not underestimate what you can really do with this technology out of the box. And so you have startups claiming to be able to do crazy things, whereas 6 months ago, you never would have believed them. And you're like, oh, that's a massive investment. You actually can get pretty far right now. And so I think there is actually money to be made by moving very quickly to market, where right now, for example, Lensa AI is a good example where I was sitting there on my computer playing with Stable Diffusion, using the automatic 1111 framework to do stuff. And I was like, this is so cool. And we're doing all this stuff and using Dream Studio and doing all this textual inversion and stuff. And then Lensa AI came out and they made $1 million in their first day. And all they did was productize what I was doing on the screen. And I had that forehead slap moment of we can just productize this. We can just take what this is and put it to market. Eventually it's all going to be replaced by a shell script. Microsoft and the big players are going to come in with these maybe sweeping broad solutions. But in the meantime, there is a reward for getting to market fast. So sometimes it feels like hype, but I can tell you from the tech point of view, there's some quick money to be made. Like Lensa AI is a great example of get to market, get some revenue in the door, don't overthink it. And if you are an angel investor looking at these, sometimes it might be easy to think that the founders are a little in over their heads. They might not be as much as historically. And I think it's okay to be a bit risk seeking right now.
Completely agree. Katie, Matt, do you have anything to contribute to that?
Yeah, I'd add, I think you're right, Cameron, and getting to market faster is better. I advise all my founders, you need to know that you have a customer. So get something out there, get some traction going, prove that product market fit. And it doesn't have to be super sexy and pretty. You look at Craigslist, for example. I mean, it's the worst website out there, and everybody uses it and has used it for 20 plus years. So, there's something to be said for getting a good product out there and something that works rather than wasting a lot of time on making it perfect and pretty.
Right.
Yeah, I kind of have an alternative approach on I guess a different thought on using AI. I've been doing startups almost for a decade now, and it always seems to be every 1 year there's the new thing you have to implement into your company. If you don't, you're dead. 3 years ago it was creator tools, 2 years ago it was Web3, and today it's AI. And all of these elements can be super crucial to your vision if you actually agree with that. But I feel like there's a lot of pressure from the investor category saying, oh, you need to implement this in, or else you're losing X, Y, or Z. When the reality, if you're building a startup that's venture backed or want to be venture backed, it's really all about your vision and what you want to build into the world. And if your vision immediately doesn't include a technology, even if it's very hot, I encourage founders to not implement, because at the end of the day, the real money maker of this technology is going to be the picks and shovels. It's going to be OpenAI, right? It's going to be Google.
Yeah.
It's not going to be the companies that are using the credits. And I think the alpha is already gone in AI. So if you think you understand the technology, you have a unique perspective and you want to use it, fantastic. But if you're just going to use it because you think you should, maybe you shouldn't, because it could derail your actual vision.
Yeah, I completely agree. Oftentimes founders are just chasing where the money's going, but kind of as you're saying, is that can bite you in the rear sometimes. Well, obviously, thanks for the contributing, everyone. We'll move on to that next question, which is what type of founder really receives, usually receives your investment? I know we have Leroy back now. So Leroy, if you want to start us off on that one, what type of founder are you usually investing in?
Sorry about that. Yeah, I wasn't sure if you'd noticed or not, but I had for the second time in my existence in England, I had a power out, and it happened to happen just now, just when this call began. So I'm really sorry about that. But I'm back now. The change of things in England, that's how we're living now, power outs. Types of founders that I invest in, I'm all about grit. I'm not about people who just follow the crowd, as Matt was saying earlier on, with everyone jumping on the Web3 and AI bandwagon at the moment. I'm all about people who have real grit, who can suffer problems and just put their heads down for a minute, get up and go with it. Because even if you invest into a founder this time, maybe it's their first or second rodeo and it doesn't quite work out, because there's so many different factors that come into making a startup work, including luck as well sometimes. But if they haven't got that grit to really get through the difficult times, they're just the wrong founder. I invested into quite a few startups last year and the year before that. Only one of them I invested into I did it on a bit of a whim. The product was okay. I wasn't a massive believer in him. He was a first-time founder, and as soon as things got difficult, he threw the towel in, and I was so upset with him for doing that, because I've been through so many ups and downs in business in total. What he was going through was nothing. It was just scratching the surface of it. So you need to have a founder who can think outside the box, always be inventing and being creative in new ways to solve problems. They don't just think there's some easy way to handle everything that comes their way. So that's the key thing, is grit. After that, it's about continual learning. If they've got a good network, great. If they've got a good education, great. If they've got a great idea, excellent as well. There's so many different factors, but for me, the key one is that grit and being able to deal with it first.
Absolutely. No, absolutely. So grit's the key word for Leroy. Katie, what word do you think summarizes your founders?
I love grit. I 100% agree with everything Leroy said. The other thing that I really look for is coachability. Somebody that's going to listen to the suggestions that I provide, or that other experts provide, and that they're going to take that feedback in and not just shut down and say, no, you're wrong. You have, like, every founder is going to do 1,000 pivots, and the sooner they realize that, the better. And, yes, there's going to be 1,000 opinions coming at you as well, but being able to work through that noise and go with their gut and figure out the proper solution is really important as well.
Absolutely. Coachability, grit, all great attributes to have in just a person in general. Matt, what are your founders typically, what are they like?
I think the best founders have a high threshold or capacity for original thought. All my answers so far have like a little bit of a trend, which is like, don't follow the crowd. And I think that it's actually really hard, like almost impossible, to not follow the crowd in the way that it still allows you to build a large company. So I think you need a really strong basis of independent, capacity for independent thinking. If you can do that, then everything you come at is not influenced by external forces, is influenced by your gut and internal forces. And if you don't have the capacity for independent thought, you might make money, you might sell, you might build $100 million company, might build even a $250 million company, but you're not building Google or Facebook or Apple. For some, $100 million is massive, but for the venture capital industry, you need those large companies to make it all work.
Completely agree. And Cameron, wrap us up here. What founders are getting your checks?
I don't know yet, and I love being able to say I don't know, because it dodges a question. But I'm working with founders of like really all kinds of different backgrounds, and it seems like grit is a good way to put it. Coachability, I think these are all great. I'm a little over focused on the product, which is maybe a good lesson for me, and like really excited about like how much clarity do you have on what you're building. Is it really going to work? Is this, has this been thought through? And so that's probably my vehicle for understanding the founder, is how well they're able to answer that question. Is it, well, there's a space and we want to be in it, and we have some good people, as opposed to, do you know what it takes to make this thing do, what you want it to do? If it's a product that we're talking about. So I guess maybe I'm saying that the founders I like working with are the ones that are, are able to actually make products do things.
Right.
And get traction and understand the complexity of what they're getting into.
Absolutely. No. There may be a follow-up question, maybe for anyone. If you want to chime in here, please don't make me call on you. I know, kind of alongside what we just talked about in the previous question, and then the subjective qualities we discussed here, are you looking at more technical founders who can develop and create IP within their vertical, or really someone who is sales-based, or kind of that inherent CEO type character who can just sell anything to anyone and get customers base and test that product out and continue that flywheel? What's more important, do you think, at this stage that you guys are investing in?
For me personally, it's someone who has that sales ability to purvey their idea and their vision. Of course, they're always working on their vision. It's always improving. They're always getting better at their job. I think that it's great if in the early stages you want to save money, if you can have a technical founder who is purely technical, but they may work out to be a great business leader, but there's a lot to learn in that. That's a whole different skill as well. So I personally am more interested in someone who has a great business understanding, is able to sell their vision, and able to organize how a business should actually operate in a functional way, to protect that bottom line, focus on growth, focus on returns, rather than someone who is a genius as a developer but doesn't have all his other skills. Sure, we're supposed to be hiring people to do that, so maybe you can kind of test your product in the early stages, but I just think there's so much involved in being a founder that you're picking up along the way, and if you lack that personality, I think it could possibly, not always, but it could possibly be a struggle, I think.
Yeah, it's usually a binary belief. I know someone, you usually go one or the other in how you're selecting your founders. Does anyone on our panel kind of have the opposite belief, or you kind of all agree with Leroy?
I just say that I want a founder that understands their customer and understands what the customer outcome is. I mean, I think that when it also depends on what you're investing in. Like, I invest in both tech and CPG, kind of two very different categories. And so as a founder, I'm really like, when I have a tech founder, I want them to have some sort of tech background, and be a really good salesperson. I mean, I think that's what a key is. And then if in a CPG business, I really look for disruptive CPG products. And so I want them, like, to go back to what Matt said. I loved what he said about the original thought and not going along with the crowd. That's exactly my thesis when I'm looking at CPG products. And so that person has to really, really understand the customer in order to make that business a success.
Absolutely. Anyone else have any thoughts on that?
Yeah, I would say, I mean, you need both. I think like 15 years ago, I would argue you don't need both. You just need to be able to build. Because there wasn't so much noise in the marketplace. But today, like, you need to be able to build and you need to be able to sell. And if you can't, you need to have someone on your team that can do what you can't. And I don't think you can compromise. If you don't have someone on your core team that's doing one or both of those things or split responsibilities, you're going to have a weaker opportunity than someone that's working in the same space.
Yeah, completely agree. Now seed rounds you're seeing $5 million seed rounds. It's important just to be able to do both initially. I'll kick this one off with you, Katie. I want you to start us off on really what you're financially expecting when investing into a startup at this stage, and maybe also let us know into what stage you're looking at these companies, just so we can have some context.
Sure. So generally angels come in at the very, very early stages. So in terms of getting a return, I'm not looking for a return or expecting a return for at least 5 years, maybe 7, maybe 10. It's I know this is a long-term game, and it's going to take a while. And then look, the VC model is they're looking for the one company to return the fund. I kind of look at my portfolio the same way. I'm looking at a company to return 10, 15, 20 times what my investment is in order to repay me for all of the investments that I've made.
Yeah, absolutely. Leroy, what are you thinking?
I think that question, it's not just about, it does mention the financial side, but also it's about the relationship, I think, with an angel investor. It's, when some angel investors, you really want them to invest with you because of their own experience that's relevant to your vertical. And that can be super, super valuable when you can pick up the phone to them. I've been a founder for previous investments and even now, I think some of them are like my life coach and vice versa. I still get on the phone to them and see what they think about decisions that I'm making. That can be really useful. Technically, that can be really useful. But however, as an angel investor, you don't need to be that person to build that relationship with the founders that you work with. It's a bonus if you do. But ultimately, I think from my perspective as an angel, of course, I'm looking for multiples. If I was looking for just 5-10% growth, I would just invest in the S&P, in the index instead. But what I'm really looking for is something that can explode. And to find that, there's two things. One of them is that you might not even understand fully the beginning to end of this founder's vision of how they're going to make it into this big business. You want to believe it, you want to have an idea that it kind of clicks with you, but you might not see the full vision, understand how it's going to get there. But you think, you know what, I'm going to take a punt on this idea, because ultimately, I think the statistics show that you do need to. I think the word Travis used to me yesterday was spray and pray or something like that. You do need to invest in a number of startups, because it is. You get a feeling, you like the founder, you want to see a multiple, but you do have to invest in a number of startups that you've got a kind of a feeling about, but you are looking for a multiple on your return, hopefully 100. The best way to get a rough idea of that is to see how big is that market. Is it really feasible that they can take a chunk of that market? If it's a new market, what's everyone else missing? Why aren't they doing it? There has to be enough market. That's the main thing. There's just no point as an angel investor investing in something that has a 5, 10, even a $20 million TAM, because that doesn't translate into a return for you. It doesn't encourage other investors, other VCs, other investors to invest at later stages as well. There's not enough market size. So the market potential is the main thing. Your belief in that founder, if you can be beneficial, like I said, technically, just in a general relationship with advice, that's a massive bonus, because there will be difficult times for founders as well, when they will need to speak to someone who has been there right from the beginning. And I think you'll feel more comfortable as an angel investor as well, that I can trust this person's instincts, I can trust this person's integrity, and I believe that it's going to work out from that communication as well.
Yeah, absolutely. Yeah, the spray and pray approach, I think, is interesting from understanding the market, especially at the price point angels are typically getting involved. My apprehension there is kind of going back to Cameron's answer to the first question that we posed was, if you understand the niche, you'll get caught up a lot in that FOMO investing, and kind of some of the past waves that maybe Matt mentioned. You get caught up in a lot of you have to tolerate a high loss rate there. Yes, you might return the fund, but that's why VCs are investing LP money and not their own. It's a different game. I definitely see what you're saying, playing out the market, and of course you're seeking returns that are non-market correlated. Maybe along that, we'll transition to Cameron. What are your thoughts here? What do you expect financially from investing into a startup?
Yeah, I mean, I think the playbook of looking for your 100x or 50x is important, but I think another main reason for angel investing is to get in on the next round. I mean, it's about licking your. I don't know if you had a sibling where you get your Halloween candy and you don't want them touching it, so you lick it, right? It's kind of like you're licking the investment so that you can have some part of it as they continue on through the various series. So I think that being able to be make sure that you're covered for that in the paperwork, that you have the right of first refusal and future investments, and that you get to be part of that, I think is a big aspect of the financial upside. Maybe that goes without saying. I just thought maybe it'd be worth clarifying that people aren't doing that or aren't looking at their future upside with the various rounds, and they might be missing out a lot.
Yeah, how do you usually, if you have pushback, maybe you follow up on that. You have pushback, kind of fighting with founders, especially second-time founders who have done this before. Have you had any pushback on fighting for that, the kind of the shareholder rights there, or getting the pro rata? And if so, what value do you make yourself, seem to have as an angel investor to secure them if the founder pushes back?
I haven't found it controversial. Maybe I haven't done enough to get into that space. Other people can maybe comment on that, but I think it should be expected that if you really need angel investment, that you're providing, high risk service for, getting in on the early stage. And all you're asking for is the opportunity to co-invest. You're not asking for, I don't think it's an unreasonable ask. You're just saying, hey, if other people are investing, I get to throw some money in too and be part of that round. So that's my take. I don't know. It hasn't seemed to be controversial. Maybe others with more experience can share.
Now, what are your thoughts on the question? Oh, sorry, didn't mean to interrupt. Go ahead, Katie. Sorry.
I have been in the situation where I've asked for pro rata and not gotten it. I have not invested in deals because I haven't gotten it. But I will say that there's one deal that I didn't get it. But that being said, have invested. I'm on the Series A with them now. So they didn't put it in writing, but they have always come back to their initial investors. Cameron, you're spot on. That is absolutely the right thing to do for investors to pay back their early believers in giving them another bite at the apple. I think it's I think it absolutely should be in every deal, and I won't invest if there's not pro rata.
Yeah. Matt, what are your thoughts on what you should expect from getting involved here?
Yeah, I mean, I agree with everything that everyone said. I mean, it's a power law. I do think there's some firms like Indie VC and Calm Company Fund that are, kind of introducing new types of incentives where you can build a $50 million company and it still makes sense for everyone involved, which I think is really important because the venture industry is far from perfect and very flawed, even though it's done a lot of good for the world. And then kind of on the flip side of the terms, yeah, I think, as a founder, I've raised, Seadscout's raised about 435 grand. And there's been some investors that have asked for pro rata, some haven't. I mentally have already decided on the next round to let anyone that wants to participate can. But it is nice to get it in writing because you never know if the next VC has sharp elbows and they're like, oh no one that signed pro rata, they're out. So I generally agree with everything.
Yeah. No, I want to ask this to the entire panel, and please chime in. I think it's also really interesting at the stage that angels typically play at. We see a lot of kind of difference in dynamics of how that round is structured. From, it's very rare now that you get a pre-seed round that's truly priced. You're getting that YC safe. Sometimes seeing it's uncapped, it's cap safe. How important is that round dynamics there? And if so, is there preferred structure that you deploy to write checks into?
It's actually, I think it's so important, which sounds kind of silly because it's so early and doesn't really matter. It's so early, but the founders that I work with at Seadscout, they're generally all have non-traditional backgrounds. Very few of them are from Silicon Valley.
Yeah.
A lot of them are just trying to understand how this all works. And unfortunately, to attract capital, you have to be seen as understanding what the game is and being able to play the game being raising capital. There is a game, we all know there is. So I think if you're coming out there saying, hey, we're looking for a loan, you're going to have guaranteed payback in 2 years. Here's these wonky terms. We're raising $17 million on an idea. You're going to not fit the pattern recognition. So I think just looking like a normal company, raise it on a safe, standard discount or post money, reasonable valuation. If it's a post money, just kind of looking the part really makes it easier for investors to cut a check versus being super funky. It just makes an investor think this person doesn't know what they're doing. Maybe they will figure it out, but right now they haven't. So I pass. And I've seen this happen dozens, if not hundreds of times.
Yeah, completely agree with what you're saying. I think you're trying to financially engineer your own dilution can bite you in the butt when the real thing is getting a product to market. Does anyone else have any thoughts on either the structure that you expect or prefer going into from writing these checks? All right. If not, we're going to go into our final question. I think this is something we've talked about in kind of the footnotes of some of the previous questions that have been posed. But for everyone, and maybe whoever feels comfortable starting us, when analyzing these potential investments, what's more important, product or startup team?
Is that targeted at me?
Sure, go ahead, Cameron. I would love to hear it.
Yeah, my immediate response to this is the team, absolutely. And I think that's, even though I really care about the product, obviously, I'm doing product advisory, but the product is really important, but I need to trust the team to be able to make the product. And that can be, looking at the, recognizing when they don't have product market fit, making sure that they've thought through the technical requirements. I think a lot of the time the product is underestimated by the team, and that doesn't necessarily have to be a reflection of the team, but if they can take that feedback, really do whatever it takes to get the clarity on the product, to get it to the next level, et cetera, then, it's about the team and their ability to make the product more so than the product itself. That said, if they're not able to get the product and they're not able to do that, that might be a reflection of the team and their inability to be, clear and decisive. I'm working with one startup right now that has, a great product, but it's got to the point where it's like, well, here's what the product needs to do. Here's the space, and it's a really good idea, trying to raise money on that, as opposed to, no, get an engineer in the room, communicate with them the requirements, understand, what literally it is that you're building, and get to that level of alignment with the engineering, so that when you're going for money, you're able to say, this is what we're building and here's why we're building that specific thing and we need the money for it. If that doesn't work, we're doing this. If that doesn't work, we're doing this. Here's our assumptions, right? If you're not getting to that level of clarity in the product, it's probably a reflection that the team is mostly about brainstorming ideas as opposed to having the grit and the follow through in order to get the product done, or they just don't have the right people on the team in order to see that through. So product might be a good litmus test, but the team is what matters.
Hey, Matt, what are your thoughts on that?
I mean, yeah, the team builds the product. You need, I mean, I agree everything what Cameron just said. No extra comments.
Katie?
Yeah, ditto. It's 100% about the team and the founder. I mean, really, to me, it's about the founder. I mean, the stage, I'm super early in the majority of my investments. So it really comes down to the founder or the co-founders. If I don't think they have what it takes, then it doesn't even matter what the product is. I worked in corporate America for more than 25 years. So that the culture, the creativity, the way everything works is all top down. So, and that's going to be the same in any startup as well. So knowing that the founders are the right people to take it to the next level is everything, critical, essential.
Yeah. Yeah, Leroy, you built a number of products and been a part of some awesome teams. What are your thoughts on this?
Yeah, so I've always been, I guess, customer focused, normally in fintech mind, in financial services, where we've been following this almost quite strict protocol of how to acquire new customers, how to give them a value proposition. And we felt like in our industry, everyone was doing the same thing. And every now and then, someone industry-wide would have a new idea and they would test it out. And quite often it would do quite well because it was just different what everyone else was doing. So I definitely appreciate how important a product that works is. And sometimes you don't need to always be reinventing the wheel to make a product work well. But the most important thing with product is getting that feedback. You can get feedback from people who are experienced product managers, and you can get feedback from friends and people you know, but it's that customer feedback. It's understanding when you really have actually found product market fit, and there's no really shortcut other than running experiments as quickly as you can and seeing what comes back to you. There's no other proof of product market fit than the increase in sales and people giving you positive feedback and people enjoying using your product and coming back and using it again. That's the key thing. So there's no way around that. So product is really, really important. And also the market's constantly changing. The old ways of doing things work, but if you want to stand out, you need to invent new ways of doing things as well. And sure, you need a team that's creative to do this, team that's happy to be learning all the time. The thing that I really look for in a team, aside from technical ability and experience, really is passion. I don't let anyone near me if they're not really, really passionate about what this thing is. If they wouldn't do it for free, then I can't work with them. I don't want them to do it for free, obviously, but they need to be a sort of person. They love this project. So that's really important to me. And sometimes I will have a team where I would just give someone a chance. They've had a great educational background, great. They've done some good things in the past, and they might not be perfect sometimes, but I'll give them a chance, and I might end up doing something completely different. But it's that top-down energy and passion is what I'm really looking for into making this business work, because I know from experience, sometimes when you get a bit bigger in a business, you as a founder who you feel like you're just another guy, you become this corporation all of a sudden as well. And you have to start to re-engage with your team. And that could be someone who is you never really speak because they're so far down the line from you. It could be your right-hand man or right-hand woman as well sometimes. So you need to always be, as a functioning team, internally, you need to be able to always be engaging and refocusing what your mission is, refocusing and understanding why you're here and what you're doing it for. As a bonus, if you can explain that to investors as well, then there's more chance of them understanding why you're here, what you're doing it, and why there's a better chance of it working with you running that team than someone else.
Yeah.
But the short answer is product really important, startup team really important, but I think it's the getting feedback, the passion, and that real need to keep on improving through experiments and through advice and through feedback is what really pushes something from being just an idea to being a functional idea that has product market fit.
Absolutely.
Travis,
To follow up with this, yeah, go ahead.
Right, I really got excited about something while Leroy was talking, is that I remember that we're talking to potential investors, not founders. So used to talking to founders. Don't make sure there's something there. We talk about it's important to have a team, etc. But a couple of times I've, getting to the point of like, introducing people to investors and getting right down to that level of due diligence and opening the box and being like, there's nothing here. There's no product. Like, I mean, there's some vaporware, or there's, an amorphous concept that seems like it's valuable. Get a product person, get a subject matter expert, get someone who really knows the space to say, hey, I'm about to put in 50 grand on this thing. Can you have a look and see if it's got legs? And, I've just been surprised at how far people can get on, an idea or, believing in what they're doing, which are all good, but the rubber's got to hit the road, and you got to be able to deliver the thing that you are saying you can do. And if it's, just a bit of check the red flags, see if they're actually able to deliver on what they're saying they can deliver on, and check that there's a real product underneath it all that, is there just to.
Yeah, absolutely. No, I completely agree. And past couple of years, especially, maybe not take out 2022, is capital and development have both been commoditized effectively at a price point that I think is just really interesting. I have a follow-on question, but I'll save it for the Q&A later about product side of things. And by the way, I want to remind you in the chat, or kind of where I mentioned before, audience, please post some questions, because we have one quick thing, and then we're going to jump into the Q&A section. Before we do so, I want to hand it over to Leroy, and everyone, thank you so much for the prepared questions. Panelists, you did an amazing job. Before we have even more questions posed to Leroy, I know you have a short presentation for us, so I hand it over to you for the next couple of minutes, and looking forward to hearing.
Great. Thank you very much, Travis. Yes, I just want to talk to you a little bit about PIGEE, the homing pigeon. You might have seen behind me here, we've got the banner up here. So PIGEE is an omni-shipping and product marketplace. I came up with the idea some years ago when I was traveling in East Africa, when I found myself lost for a week during the first year of the pandemic in Zanzibar, of all places, and I couldn't get out. I was on my social media posting images of all the wonderful things I was buying in the street markets of Stone Market in Zanzibar, and people were stuck at home during the pandemic messaging me saying, hey, please, can you buy this painting or buy this ornament for me or buy this gift for me and just send it home? And I just had a weekend bag. I could barely fit anything in. And there really were not many solutions to get these products home that I wanted to buy. It was a problem that I've had, and speaking with people, it's quite a common problem that when you travel on vacation, you want to spend more on the unique things you see in that particular location, but you're unable to buy them because you can't fit them in your suitcase. It's a hassle. They make it broken, they make it damaged. So I wanted to find a solution to this. So we created this app, and I'll skip through the problem here to the solution here of this app. So what we've created is, if you walk into any street market or shop anywhere in the world, you can just ask the shop owner, I want to buy this product. Can you list it on your PIGEE shop so that I can send it home? It takes them 10 seconds to just take a photograph and list the product. You then connect with that shop owner and treat it just like your Amazon account or your Shopee account, any e-commerce account, and you add those products on your side, you add to cart, and you just click pay. You pay for the shipping, you pay for the product, and then it's shipped home. What was happening previously was that shop owners, over 90% of shop owners were not making recurring sales. They would see a tourist once, so they would never see them ever again. On the occasion that a shop owner would recommend to a customer, well, I can use maybe DHL or FedEx and have this product sent home for you. You as a customer then has to trust this stranger. You've never met them before. You have to trust that you're going to give them this money and they really are going to send it for you. On top of that, you don't know what the quote is. You don't know how much it's going to cost to ship it home until after you pay for that product. So there's lots of reasons not to do that. And with this, we've made it really frictionless, really simple, so that you know exactly what you want. You pay for it there and then. It's sent home. It's tracked on your device. And when you get home, if you get any regret, you can continue to buy more products from that same shop owner you might have met in Bali or Mexico somewhere. You can buy more things from them. And so part of our mission from the vendor's point of view is for them to 10x their revenue. We're giving them the opportunity to multiply the sales they make by having these recurring sales that they never had before. And we want to make this, and we're beginning to prove already that this is a high frequency transaction business. It's not just something that happens once every now and then. We're a B2B2C focus. So we're focused on vendors and them recommending it to their customers at that particular pain point. And there are other ways in which this can be used as well. Just recently, we had a South Korean tourist enter a shop that we have registered in Bali. They didn't speak any Indonesian or English, and the shop owner didn't speak any South Korean. But using the auto translate within the PIGEE app, they were able to just speak via the app, and it would automatically translate to the person's language. And even more so, when that South Korean who made a purchase now goes home, they can just speak in Korean on their device and say, "Hi, I want to buy some more of these products, please." And you almost forget you're not speaking the same language. You almost forget this is not a normal e-commerce store. This is this small shop you found somewhere that no one else really knows about. And the great thing with that is that you can now potentially sell those products in your own marketplace back in your location. You can become they're almost like a drop shipping service for you as well. So there's lots of commerce that can be created through this journey. Earlier on, I was talking about the size of the market and the business model. We generate revenue from a commission on the products that we sell, a margin on the shipping. So we're always cheaper than if you go directly to a shipping company. And we also charge FX commission as well. We see this as being a really large market. We're currently focused on Indonesia and Bali, where we had our first pilot last year, and now we're about to go into our second pilot this year, which is what we're currently fundraising for. We see it as a $49 billion market. We see there's been 113 million potential customers, and in Indonesia alone, we believe we can generate 265 million in due course in this business. There are some competitors, but not directly for this is a first of its kind product like this. The other competitors that exist are more domestic based. They're more end to end, whereas we're an omni shipper. We partner with these companies like your CSAPAT, and we're taking the omni shipping idea of, say, ShipBob, which has done really, really well in the US, and we're taking it into this global at the point of pain process that we think will be bigger than all of these companies have been in the past. We released the MVP last year. Going back to what Cameron was saying about products, I read somewhere that if the first version you release of your product is you still think it's great, you haven't learned anything, you should be able to look back and say, I cannot believe we released that version as if that was going to work. And what we found out in our pilot one in Bali was that the first pilot didn't really work very well. The idea was there, but the use cases with shop owners was that they didn't want to use PayPal, for example, to withdraw money. But now we allow 117 countries to receive payments straight to their banks. We found that we used only FedEx and UPS as our shipping partners. They wanted local shipping partners who they're used to, so we integrated with Lion Parcel. We made the registration process really, really simple. So now these shop owners can register. It takes 1 minute to register now, whereas it used to be a whole process. And now we've just gone post revenue, and we're really proud of that as well. We've just begun to do sales in what is, and logistics is a really complicated process. And I'm not from a logistics background myself. We've just hired we just hired someone who used to work at FedEx for 8 years. Actually, he's just joined our team in Indonesia. It's a really complicated process, but we make it extremely frictionless and simple for both ends, for the vendor and for the customer at the end. That's what we do. And this is me here training up the sales team that I had going around registering shops in our first pilot. And these pink PIGEE signs are the shops which are registered. We have a lot more registered now. We had about 50 to 60 shops registering a day at the moment on the PIGEE app. In fact, we with this round we're doing at the moment, we're doing a full round, and we're also doing crowdfunding round as well. If you click Join PIGEE at the top here, you'll see the information about the crowd round. We really are very confident that with this next crowd round, when we go back to complete pilot 2, we can get up to $10,000 MRR, monthly recurring revenue, by the end of that 3-month period. We think we're going to really start shifting in that space. Some of the vendors we thought would do about 4 transactions a month. We're learning now that we should expect around 30 transactions a month from each vendor. I'll just skip through some of this before I kill into the time too much. I won't show you the last page. But if anyone would like to find out more about PIGEE, please click Join PIGEE. Drop me a message on LinkedIn or anything you like. I'm happy to talk to you more about that. So thanks very much for that time there, Travis. I'll let you.
Amazing. No, that's awesome traction so far. And yeah, congratulations on what you're doing. Yeah, like you said, if you want to learn more about PIGEE or have questions directly targeted at Leroy, go ahead and click that button, and he'll go get back to you directly. Now time for the Q&A. Audience, there's still time if you want to drop some notes in the chat box. Actually, this is a question I wanted to ask. I had written down to ask during this section, but it looks like one of the audience members had asked it already. What does deal flow pipelines look like for you? Like as an angel investor, how are you expected to get introduced to founders, or really, what are successful deal flow channels that you've tapped into over your time as an angel investor? All right, I'll start that off with Matt, if you don't mind.
Yeah, sure. Well, the way that I've set up my stack, we are the deal flow provider. I mean, Seadscout has built a very simple way to input your information, and we have over 600 investors that have signed up to browse that and whatnot. But the way that we find our deals, I mean, first we market, so people find us, through Twitter, through newsletters, through LinkedIn. I also scout myself, so I look at different cohorts, Techstars, Y Combinator, different accelerators and things that like interesting Mercury raise, and the ones that like interesting I reach out to. And a lot of people assume based on the signal of Seadscout that we like have mostly referrals, but I would say we are like 5% referrals, mostly just like direct. Yeah.
And so, Cameron, are you expecting, are you going to a service like Matt's, like Seadscout, or one of the other people who are kind of aggregating deal flow there? Or are you expecting some sort of warm referrals? Or just tell me a bit more about your deal flow channels.
Yeah, I've found myself in a really interesting situation. I'm getting a lot of cold deal flow in the, from layoffees, people who are either forming startups, with their friends coming out of, Microsoft or Google or the big tech, or they're people that want to get in front of that talent. And so I'm getting cold, introductions. And honestly, I love it. You don't have the luxury of, really well qualified warm leads, but I actually enjoy providing the warm leads. So being able to be first to hear what people are up to, use my spidey senses and product sense to see if there really is something there, and dive in a little, and then provide that qualified lead to someone else, or do my own thing. So yeah, I think most people prefer the warm lead, but I'm in an interesting position where, that's not the case for me. And I'm taking, 16 one-on-ones a day with potential founders, and just hearing them out, getting a sense of what's working, and then following up as best I can, and either grouping together co-founders, or, trying to find deal flow, or etc. So we'll see how it evolves, but that's what I'm doing right now.
Absolutely. Katie, we'll finish that question up with you, and then maybe also talk about how it differs when you're talking about your tech portfolio compared to your consumer investments. What are some deal flow channels that you've tapped into for each of the above?
Sure. So I am very specific about the type of founder that I invest in. So I invest in underrepresented founders, and to me, that's women, people of color, LGBTQ. So I have surrounded self with a network of like-minded investors and get deal flow from them. I'm a member of Chief, the Executive Women's Network. There's a lot of founders that come out of that I have supported, in addition to another organization called Switch. Also, just putting up on LinkedIn that you're an angel investor, you'd be shocked at your DMs. They're insane. So yeah, and I also provide deal flow through PowerToPitch, because once the founders are through our program, we make warm intros to investors. So that's sort of how I pay things back, similar to Matt. And sorry, what was the other part of the question?
No,
Travis?
that was perfect. No,
Okay.
you're very, I love the mandate, and like you said, building a community around like-minded people is most important. Matt, I want to be respectful of time here, but this one's directly for you. I know obviously Seadscout in terms of angel investing is very has a very interesting process. Maybe you can talk to us about the terms of investments you go for and the target equity percentage you're targeting, or in terms of allocation, maybe. That was a question from the audience, and I'll let you kind of answer that how you see fit.
Yeah, sure. So we have, I would say, invented a very new and not widely or accepted at all vehicle to work with founders on an equity basis. We've done it with about 30 founders so far. That was our first test cohort, and we're evaluating. The way that we work is we're a C Corp. And because we have all our investors and all our about 40 advisors, not to me, but to the company and the companies we help, it's attractive for us to companies, for us to help them. So the way that we work with them is a warrant capacity. So if we meet a founder and we think that they're interesting, we think there's legs, Seadscout, the corporation, gets warrants in the company. And then it's a C Corp on C Corp and pretty much situation. So then if that company exits and creates value, that's on our balance sheet. And then that can go in, if we sell secondaries or they sell, that goes back into the business bank account, which increases the value of the company. That is, I think that is, we're the only one that does that for various reasons, which I'm happy to go into, but that's how we kind of operate within Seadscout.
Perfect. Final question. We've run out of the ones that were posed to the audience. This is what I wanted to get to in our last question. I'll ask Leroy first. So, there's two different types when you talk about product. Like I said, capital and kind of devs has become commoditized. When you talk about the product, and when we're getting involved in these types of investments, there's the two ways of thought is you release, go to it, and then you kind of hit that flywheel effect, try to release something that'll make money 10 years down the road, 4 years down the road. There's also the blitz scaling model, charge customers immediately. How important do you think early stage revenue or trying to monetize immediately is for products you're going to invest in? Leroy, we'll start with you.
Depends on your network. Matt mentioned this on his Twitter the other day, really. Where you can, if you have a good network, you can raise money without needing to show revenue sometimes. If what you're working on is in vogue as well, you can do that and get things going. You've got a really good chance of proving quickly if it's going to work or not. If like most people or most founders, you don't have that network, you really have to prove without a doubt your hypothesis. And your hypothesis is not just the sales. It's that if we put X amount of money into this, will it generate Y amount of revenue ultimately? Right. So having some sales, some real life customers is great. You've answered that question. Someone who is real in the real world has found that this is a problem. You then have to persuade people that there'll be enough of these people who have this problem that needs fixing and will pay for it. The only real way to do that ultimately is to have a fully functioning business that's funded, that is able to go out and prove its hypothesis. Until then, you're only really proving it in a small like cataclysm, like a small kind of test case, really. So it is a bit of persuasion and a bit of network ultimately. But yeah, I've invested into founders who haven't done any sales yet because I think it's a good idea. I think they were good founders. It's much harder without network to be able to get that funding to really prove it, because businesses, they take money. Sometimes there are businesses that if you're a technical person as well, you can just maybe use no code. You can just build a money generating idea, but often those people, and I think Matt on his Seadscout will see lots of people like that who are able to do that. They're not looking for investors. They don't need them. I've had business before. I've never even considered looking for an investor because I know the type of business that it is. It just didn't need investors. So why would I ultimately?
Right.
But for most businesses, to be able to prove the hypothesis, you do need funding, and you do need to keep on proving each bit of this hypothesis as you go.
Yeah. I appreciate we're at time. So the rest of the panel, please, I would love if you have any last minute thoughts there, kind of with that question posed, or anything else, last closing remarks you want to make, be much appreciated for our audience. Okay.
Think for yourself.
Pardon?
Just think for yourself. It's a crazy world, so
Yes.
think for yourself out there.
Absolutely. Have a thesis and believe in it. It's your money, not anyone else's. And that's why it's an angel panel. Awesome. Well, guys, look, thank you so much for joining. We really had a great time doing this. I think the angel space is always moving. It's chicken and egg type scenario, as we talked about, kind of with market conditions. As Leroy mentioned, there's a short survey at the end. I think when you jump off of this, we really appreciate it. It shouldn't take longer than a minute for you. It also gives you an opportunity to select who you want to connect further with, based on any of the panelists, including myself, to have a follow-up call or learn a bit more about. We all love to talk to you. We'd all love to kind of share our thoughts in a more kind of intimate and interpersonal way. But like I said, we are very, very happy to have you here. And I'll pass it off to Leroy and the panelists for any closing remarks they want to have.
I can see there are some questions from people as well. Unfortunately, I think we've run out of time a little bit to answer some of them. Kadza was asking what advice you have for a food entrepreneur. And Theodora was asking about what happens if someone wants a refund on their products. There is insurance on all of these products, and PIGEE pays directly back. But I can talk about that in more detail if need be. I've got to say thank you for everyone. This is Travis's job, but thank you for everyone for joining on this panel today, including the audience as well. It's been really, really great fun, and I hope it was beneficial to everyone watching. And I'll let Katie and everyone else have the last remarks.
Thanks for having me. Hope it was helpful. And if anyone wants to hear more about PowerToPitch, our website is PowerToPitch.com.
My parting words are feel free to poke. Sometimes the best thing to just poke on something from investors. If they don't have good answers, like that's a red flag. What's your plan to getting to seed funding? Well, you had 3 or 4 ideas there, but you didn't have a clear plan. Or, how are you gonna find technical talent? Man, that doesn't sound strong. Like, poke hard, follow up, and figure out how to be helpful in those areas. But yeah, don't be afraid to be critical.
Yeah, and Matt, that leaves you. Any closing remarks from your end? Oh, I guess he dropped off. Well, like I said, thank you so much, everyone. We really had a good time, and look forward to connecting a bit more. After everything's going. This was live streamed, and there will be kind of an opportunity to kind of review the replay. But all in all, thank you so much for a great evening, and looking forward to the next one. Have a good one, everyone.
Right. Thank you very much. Take care.
It's now in the territory of Tyrell Malacia to defend.